The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 10th fantastic Friday edition of the Nadex Bull Bear Binary Option Hour. I'm your host today, Steve Rhodes. Darrell and Tom are traveling. And, folks, I am absolutely grateful for your presence here today. My outcome, as always, is to teach you how to set it and forget it. That's really what the Nadex platform is all about. If you have not had a chance to test that out, just simply go to the homepage of TFNN.com. Over on the right-hand side, you can click on the Nadex banner. You'll be set up with a nice little trading account there. They give you $25,000. How'd you like $25,000 a day? Go over to the Nadex platform. Go test it out. Now, if you are in the Boston area, then what you want to be doing tomorrow morning from 8:30 to 12:30 is to spend time with our man Tom O'Brien and Darrell Martin. They're going to teach you how to use the trading platform. It's a workshop called Dynamic Trading Strategies. It is hosted by Nadex, but and this is held at the Boston Marriott in Burlington. So what a great way to spend a Saturday morning. So if you're anywhere near the Boston area, go ahead, take time, go out to the homepage of TFNN.com. Go ahead and sign up for it. It is not too late to do that. All kinds of great prizes being given away as well. So take advantage of that opportunity. Right now, we've got the Dow up 23 points, trading at 15,105. S&P up about 0.25%, up 4 points, trading at 1630, on its way up to about the 1650-ish level. NASDAQ is trading out at 3427. That's up 17 points. NASDAQ here leading the charge to the upside, up 0.5%. Russell 2000 just slightly behind it by a nose, up 4.47%, up 450, trading at 970. The NDX 100 up about a little over 0.5% as well. That's up $16, trading at 29.77. New York Stock Exchange, a little weak out here, up 10 points, only 0.1%. The Philadelphia Gold and Silver Index is down just a tad off 250. The only real bearish candles that we saw in the marketplace yesterday was inside the XAU. The XAU is trading, that's the Philadelphia Gold Silver Index. That is trading off, as I said, 250. So getting a little bit of follow through. It formed a shooting star candle yesterday. That is the cousin to the brother. That's just simply seen up at the highs. You did see a bear sash candle inside the NYSE as well. That says start to be careful because the breadth of the marketplace is starting to give you some reversal signals out there. Our call-in number is 877-927-6648. Would love to hear from you, so feel free to give me a call. We can take a look at your stock, see what it is doing. Let's go take a look. We'll start off here taking a look at the NDX 100. That here yesterday completed a 1.272 butterfly sell pattern out here, and that price point projection was $29.84. You're trading at $29.77 right now. Yesterday got up to $29.80.36. So it's in the process, we'll say, of completing a 1.272 butterfly sell pattern. That's after forming that 0.786 Gartley sell that held for quite some time. Finally, truly busted through it back in April 10th, and that leads to a butterfly. Now, question is it going to be a 1.272 or a 1.618 butterfly? Right now, it's the 1.272 that we'll pay attention to. I do suspect what we will see is the market go ahead and form its top sometime next week. Now, if we see the NDX go ahead and break with conviction above the 29.82 level, which is where it's trading, almost where it's trading at right now. And so you say, well, what's conviction? I'd say conviction would be a close above 3,000, 3,010, something like that. That'll be conviction enough to say, no matter what, even though it is in the overbought territory, that it wants to move all the way up to 31.15. And then we have to just simply be patient with regard to the move, the expected move inside the marketplace. So the NDX in the process here of completing its pattern. If we go take a look at the S&P 500, the S&P cash, let's go see what it is doing. In fact, what I'll do here is I'm going to do something that I'm going to switch over. I did this last night a bit. This way I can give you the shorter-term view, intermediate term, and the daily view. So give me just a moment here to switch over to another set of charts out here. I didn't mean to really do that. I meant to do this first. Close all. Give me a second here to do that. And close, clips. There we go. Okay, so let's take a look here at the S&P 500. We're looking at the daily chart now of the S&P 500. Now, what we're taking a look at is we're taking a look at the rising price channel that the S&P has been traveling in ever since the November 16th, the low out there. And again, I'm not looking at trend lines. I'm looking at price channels here, and prices tend to travel with inside that channel. And we can see right now, yesterday, the S&P got up towards the top of that channel, got up to a high of 1635.01, closed at 1626. Not a bearish candle or anything there. So the bears had the chance yesterday to take control. They had a chance, quite frankly, yesterday in the S&P 500 to form a key reversal day. But they missed out on that golden opportunity. That says that prices want to move higher. Where do they want to move to? I think along the top of this rising price channel. I think just kind of a nice, slow, gradual move up to about the 1650 level out here. Could just be a spike of the 1650, get back inside the rising price channel, or it could be just simply a gradual move up to that 1650 area. What's at 1650? It's the top of its next primary trading range. That's the horizontal range that price would travel in. It's trading inside that horizontal range right now. That's this black bar, which is 1550. That's the monthly. That is the monthly primary trading range, which is different than the daily. It's larger than the daily out there. So it looks like 1650. That's the target on the daily chart. Now, what I'm going to show you here, we're going to take a look at the S&P 500. We're going to go take a look at April 30th. On April 30th, I've got my little cursor hovering over that bar, my little crosshairs hovering over that bar. What I want you to pay attention to, if you're just listening on the radio or your mobile device at TFNN.mobi, thanks so much for doing that. You can catch the live stream of this show here just by going to the homepage of TFNN.com. On the right-hand side, what you will see is a little button there with 3 smartphones. Click on that. The show will stream live to it. The archive of this show is on Channel 10, I believe, as well. So you can take a look at that. If you'd like to see these charts in HD, just go to the homepage of TFNN.com and sign up for the Tiger's Den. You can test drive that for 30 days for no obligation. So that's a beautiful thing. Now, the reason why I'm hovering over April 30th is because of the 6-month seasonal cycle. It's called Sell in May. It pretty much is going to be out of the news here shortly. It's mostly out of the news, so people are taking their eyeball off of it. I don't want you to take your eyeball off of it, because where the S&P 500 will pull back to, it'll pull back to the 200-day EMA, at least the price level that it was at on April the 30th. That number, and you can write this one down, is 1470. So short-term, right now on the daily charts, I'm looking for this to move up to about 1650. Intermediate term, I'm looking for the pullback to pull back to at least the 1470. That is your target range. At 1470 is going to basically bring us back to the high of January 2nd out there. That happens to be 1462. So really that's where it should at least get back to, and if it can get back inside there, that sets up moving all the way down to the swing point of December 31st, which is 1426. So the range of where the pullback should take us to is around 1426 to 1470, and that is using the daily. Now, longer, and I mean longer term, in taking a look at the monthly chart out here, what the S&P 500 should do is end up over the longer haul after this retracement is done. After this pullback is done, I expect we'll see the S&P 500 get back over its highs again, those highs being the 1576.09 level. And once it does that, so after it comes back and it gets does what it's supposed to do on the Sell in May platform. If we take a look at the monthly chart here, you can see on the bottom of my screen, you can see on the monthly basis it's in the oversold territory, or overbought territory. My apologies there. So I expect it'll pull back, and then what the S&P 500 has been doing is traveling in a 16-year, 800-point consolidation range. We can go take a look at consolidation after consolidation after consolidation, and what it will teach us is that when you break a consolidation, what you're going to do is you're going to make a move equal to or greater than that consolidation. And that's what we have going on here in the S&P 500, and that's what sets up the longer-term move to the 2350 area. because it's been an 800-point consolidation for 16 years out there. So that is on the monthly chart. Now, let's go take a look at the Dow and see what the Dow is doing. We can do the exact same thing here with the Dow, with the exception I need to change out my moving averages for you. So I'm going to go ahead and do that. Let me give me a second here to find those. I think that's right there. No, there. Where is it? It's one of these tabs. There we go. So it's why I'm going to get rid of the 50-day out here. So it's going to be the green line. So we're going to do the same thing here. Now, with regard to the Dow's traveling at 15,114 right now. I suspect it is also inside its next primary trading range, but you can see the intersection here. The diagonal black lines that we're looking at, that is the rising price channel coming off of the November. I'll pull it back a little bit further for you. That's coming off the rising price channel from November out here. Now, let's go find some intersections. Well, the intersection here is going to be the midpoint of that primary trading range, which is going to be somewhere right around 15.5. You're at 15,100, so a nice big up spike or something like that would be nice to go ahead and complete that move, and then we see it pull back. Now I'm going to hover over the April 30th area. April 30th, the 200-day exponential moving average, 13,691. Well, 13,691, that's only going to take us into the actual February area, February 25th, which is right around 13,784, the low there. That is a set of swing points. If those swing points hold, so be it. That's just a pullback. If that area doesn't hold, we start to see pressure or volume, and we've seen in the Dow here, we've seen volume off of the highs and significant equities. That just really leads me to believe that the sell in May or the 6-month, and let's not even call it sell in May any longer. Let's just simply call it the 6-month seasonal cycle and what happens there. And you really want to become a student of that 6-month seasonal cycle. I'm going to give you some of the class today, but either, do some additional work. If you'd like real detailed information about it, go sign up for my newsletter service, Mastering Probability. The last workshop that I did a couple weeks ago was a thorough analysis of this. I don't ever believe anything that anybody tells me. I just simply go do the work. If you do the work yourself, what you're going to do is you're going to uncover some amazing things out here. In essence, I'm sharing with you some of those amazing things. At least in my opinion, I think they are amazing. It's always about being able to step back and look for patterns inside the marketplace out here. So I expect when the pullback does occur, we'll see inside the Dow is we'll see a move down to about 13,780 or so. Now, that's on the daily chart. What does that? So on the daily chart, I'm looking for it to move a little bit higher with the rest of the market before it puts in its high. And then on the intermediate term for it to do that pullback. What's on the longer-term horizon for the Dow? Well, the Dow itself has also been traveling in a sideways trading range. I need to put up the monthly chart out here. That might help you if I do that. It would also help me. And we take a look at that. That's been a 5,500-point consolidation. That's been the last 10 years. The Dow itself, the top of that consolidation out here is 13,000. I wasn't even talking about the Dow pulling back to 13,000 or anything like that. So all that the Dow might even do, even if it were to pull back into that area, even on a really nasty decline out here, all it would be doing is testing its breakout area. The Dow, over the long term, wants to head to 18,500. 877-927-6648. We'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Gold getting hit. It's off about $50 right now, down 48, trading out at 14.20. Silver also taking it on the chinny chin off 70 cents, trading at 23.21. I'm going to go ahead and get back to what we were taking a look at. Now, one of the things that I do for my clients, all my newsletter subscribers, is I've got over 40 hours worth of educational content that comes with the newsletter. It's all video content. We're all visual out there. And what I try to do, I have been doing it every other week. Now that I don't like just replaying the same thing. So I don't know what your tool shed looks like or your garage, but I love tools. I enjoy going to Home Depot and taking a look at a tool. I say, now that's cool. I could use that. I may only use it once or twice out there, but I love to have tools. Well, quite frankly, it's the same thing when it comes to trading and investing. There are certain tools that I use, but I don't for a cent or for anything believe that I have learned all that there is to be learned when it comes to taking a look at different patterns or technical analysis out there. So I'm always looking for new tools. And so several months ago, I started brushing up on my primary trading range, boundary lines and so forth. And, the easiest way to really brush up on that is to call the master. And that master was Bud Rolfs. So I gave Bud a call. We went back and forth, and Bud was basically giving me some private tutor lessons and taking a look at his, he had retired, so he wasn't going to be, in essence, doing anything with it. I wanted to share that with my clients as well. And as we were going through this, as we were just taking a look at examples of consolidation patterns out there in the marketplace, that is when all of a sudden the discovery of, oh my goodness, look at what is really going on inside the markets as you step back and you took a look at the longer-term charts out here. So it was my inquiry that started that whole shenanigans, good shenanigans, by the way, and it's just really when you start taking a look at these consolidation patterns, which the part of the cool thing about that was, in my opinion, is being able to teach folks that are interested in learning about technical analysis, but, aren't that, maybe they're not math-oriented. We're all visual, and I believe that identifying consolidation patterns is one of the easiest things to do when you take a look at a stock chart. And then, or any chart, doesn't have to be a stock chart, and then when you realize that consolidations will usually resolve themselves in the direction they came from a consolidation standpoint, then you can anticipate where the next move will come from. But here's the cool thing. It doesn't really matter which way it resolves itself. When it resolves itself, it'll go ahead and it will make at least that move of the consolidation. Well, so what am I looking for? I'm looking for the market to make a top here, and a fairly significant top. Now, it could happen today, quite frankly. I think it's today. It's today. I know that it's soon. And we take a look at a number of patterns here that are completing. Yesterday was the first indication that it might have occurred. Yesterday, coming into the close, it didn't. Just requires patience. Inside the composite here, and everybody talks about the composite and how weak it is, and everybody uses the benchmark of 2,000. Okay, I can dig that. I can buy that. No big deal out here. Now, let's look at what the composite is doing today. The composite is making a 1.618 butterfly sell pattern. Those are powerful patterns out here. The composite is also up above its next primary trading range out here. But it's, so that's okay. The composite is also towards the top of its overbought territory. So the composite here looks like it is about to top. Can it move higher? Can it move up to about the 34.50 level? Of course, only another 25 points above the 1.618. Would that negate that pattern? No, it wouldn't negate that pattern. Remember, we're just being extraordinary here. We're not looking for perfection because it doesn't exist. Absolute lowest possible standard. You should bury perfection. It doesn't exist. Don't chase it. What you're looking for is you're trying to deal with guidelines out here. Now, so we know the composite is also near a completion pattern. Now, let's go take a look at the longer-term chart because this was the real eye-opener. And when we take a look at the monthly chart out here, what the composite had been doing is been traveling in a 1,700-point consolidation range ever since the highs of January 31st, 2001 out there. So it's been traveling in a long-term consolidation range, and it was the composite that actually broke through first. And it did that on February 29th, 2012. Broke through that area, came back and retested it, rejected that area again in June of 2012, came back and tested it one more time, November 30th, 2012, and this has actually made the real breakout. So what everybody talks about as the weak link out there, the composite itself is the one that's made the real breakout. And if this is going to make the same move as its consolidation pattern, guess where it's going? Folks have said, I don't think I'll ever see the highs that it made in 2010. I say just live for another 4 or 5 years, and you'll see it out there. The low of that is going to be 43.55 out here. The price projection, I'd say it's right around 4,600 or so. 877-927-6648. When we get back, I'm going to show you why sell in May or the 6-month seasonal cycle is something that you absolutely need to pay attention to. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, the Dow is off 25. S&P is down 1. And this session here, this is the little engine that could. It's all up to the Russell 2000. It looks like it is up about 3 points here right now. Now, the Russell 2000 here has a confirmed A to B equals C to up. That price projection, 973. The intraday high so far, 971. So we can, for all intents and purposes, say that it has completed that pattern. It's only been a 0.382 retracement and says that it could easily move up to 986.36. I suspect that is really what it wants to do. It's neither over. It's certainly not in the over bought condition, so it's got the freedom to move up into that level, right around the 986 and change. If we take a look at the Russell 2000, just as we did with the Dow, just as we did with the composite We'll take a look at what the Russell 2000 has been traveling in as a 11-year, 500-point consolidation range. It, too, broke out of that consolidation range. It did it in January of this year here, and it's broken out with conviction. What does that set up? That sets up that the Russell 2000 wants to make a move up to 1350 out here over the longer haul. I do expect a pullback. Why do I expect a pullback? Oh, let's just go over here to the New York Stock Exchange as well. And let's just take a look at the NYSE. It did give us a little bear sash candle here yesterday. It's a reason to be cautious for sure, because we're up towards the overbought territory. So we're getting a little bit of follow through here on the NYSE, but we really need the decliners to lead advancers today by a significant margin in order for the summation index to be able to tick down. But if we take a look at the longer term picture here inside the New York Stock Exchange, what we'll take a look at, it's traveling in a rising price channel, and it is above the 0.786 retracement. That number was 9,059. You're at 9,390 right now. What this says is that the New York Stock Exchange wants to complete its move of a move and get back to the 2007 highs out there. So it's above the 0.786 level. When you get above a level, it wants to go up, and it wants to go to the very next level up there. Now, what I'm going to put up on the screen here, I'm going to put up my little analysis. This is just simply going back over the last 12 years, and this is taking a look at the 6-month seasonal cycle out here. And what is really key here, I'm going to give you the secret ingredient, and it's about where that 200-day exponential moving average is. If we take a look at it, the key is understanding whether it's above or below the line. And our price, I should say. In 2000, the actual close on April 30th was 10,733. The 200-day EMA was 10,692. So price was the EMA. I should say the 200 EMA was below price. Okay. If we take a look at 2001, the close on April 30th was 10,734. The 200 EMA 10,517. It was below. 2002, the close was 99.44. The 200 EMA was above that level. 2000, and I'll just switch here. 2005, the close was 10.192. The 200 EMA 10.404. It was above. The key is, the real key here, folks, is that when the 200 EMA is below price on April 30th, what has happened? What has happened here, folks? We have seen a retracement. The only time that we didn't see a big retracement was in 2007. Did we get? It didn't come down to the 200-day EMA. We still got a short retracement, 545, a 4.5% retracement. But otherwise, in all of the preceding years, and I got folks that will say, "Hey, but what about Uncle Ben, who was just on the television? He was just on the tube here just not too long ago. But what about all the stimulus that's out there, folks?" We had stimulus that began in 2008. So we had 2009, 2010, 2011, 2012 out here. Inside 2009, the 200-day EMA was above, not below. And we still got just a tad of a retracement out there. The key is, where is it? So 2010, plenty of stimulus. 2011, plenty of stimulus. 2012, plenty of stimulus out here. Those averages, just those three alone, averaged about a 15% pullback in the marketplace. So that is what you should expect. And look, I can't guarantee anything in life other than that. What I can guarantee is that if you do the work, you can really set the expectation. You can become your own navigation system. That's all that you need to do, but everything navigates to us seeing some type of retracement, at least back to the 200-day exponential moving average. So I hope that helps you in understanding shorter term, intermediate term, and most certainly long term with regard to what it is that I'm looking at. And it's not my opinion. When I take a look at these things here, the cool thing is I'm not trading my opinions. I'm just simply trying to trade the charts and what they say. I'm always curious about, what was in the news and maybe what drove something, but it's really all about what do the charts say. So to me, that's what that's what technical analysis is all about. And what it's really all about is stepping back each day and seeing what new information was released to us. If we go now and we take a look at the metals market, because everybody's interested in what's going on there, because we're seeing, a decent pullback here. Give me a second here to switch over to that tab. Close. Oh, there we go. And as we pull back here, let's go take a look at Goldilocks and Hi-Ho Silver, see what it is doing. So far, it really has not. When gold closes below 1481, then it will go ahead and make its way to the bottom, at least 1321, perhaps even lower down into 1270. But right now, on a weekly basis, just nothing more than a sideways move. But let's go take a look at the daily chart out here, because the daily chart says, okay, it's broken a 50-point consolidation. So that's pretty nice out here, and it's been a short-term consolidation, but a consolidation nonetheless, and that was the area from April the 25th. So the low out there was around 1426. The high that was put in here right around 1487. So, close enough to a 50-point consolidation. You break that area, just subtract from 1426, $50, and it says, okay, 1375, is the number. So that's where we should at least, at a minimum, remember, you break a consolidation and you do at least the level of that consolidation as your move down. And when it does that, if it does that, it'll get inside the April signal. The day's not over. So it's a daily chart out here. So it has not, unfortunately, it has not really, you can't say it's broken the consolidation. Is it trading below it? Sure. But if it closes back up above the level of today here, if it closes back up above 1426, it's just a continued sideways consolidation out here. And with that being the case, if it doesn't close below it today, breaking a sideways consolidation says what? Says the move could be to the upside. Remember, this consolidation, they typically resolve themselves in the direction they're coming from. That would resolve itself to the upside and then go, in essence, test that 1535-ish area, the consolidation that it broke out here. So that's what's going on inside Goldilocks, silver, Hi-Ho Silver. Probably silver is going to, since that has been weaker than gold, we'll see whether that's going to, silver is trading inside the April 16th swing point. That has 200,000 contracts, so it's got big volume. Today, no volume to speak of, not like that, only 32,000 contracts trading inside the swing point. Silver probably gives us the first clue with regard to whether or not the lows are going to be busted out from April out here. And so those lows in gold are $22 even, Steven, out here. It's at 23.33 right now. And, this is a beautiful chart. Here's where you want to be all over silver if we can get it to bust those lows and do it on lighter volume. And that's $17. And $17 and change is where we have the actual exact the consolidated trading range that silver had been trading in since September of 2011 that it broke. That was about $9.50. And if you subtract the bottom of the consolidation, it's also going to bring you to $17. Happens to be a long-term Gartley buy pattern. And between what the commitment of traders are saying on the commercial side, between what the individual traders and non-reportables that are definitely in the wrong side of the boat here are saying, both gold and silver are going to be making some nice bottoms. That means that it's going to be great not just to take some positions inside the actual metal. It's also going to be a nice time to take some position inside some of the equities that just simply didn't get demolished out there. But I think the time is still just a bit too early in the marketplace. If we go take a look here at the 30-minute charts, I want to pay attention to take a look at the NQ, because it's the NQ that really gives us our indication as to what's going to be going on today, because it's been the recent strength in the marketplace. And with regard to its rising price channel, it's the one that's testing the lows. We can see that's actually what has been taking place here during this 10:30 to 11 o'clock session out here. Hasn't busted it or anything, trying to bust it. And you know the expression, if you can't bust them down, it'll go ahead and it'll try to go ahead and bust it up out here. So not seeing the market that is falling apart or anything other than in the metals and also in crude. So if we take a look at light sweet crude out here, let's put up the daily chart. And in the daily chart here, busting back into a B point. And it's doing it, volume has picked up. That B point inside light sweet crude that I'm looking at is April 29th. There were 240,000 contracts. So far today, 163,000. Breaking inside here, so this would truly be a complex A to B equals CD up. We did have a confirmed A to B equals CD up. It looked like what light sweet crude wanted to do was get up into the 99, maybe even 100 area. But, longer-term charts, they have more precedent and more priority than daily charts. And here's the weekly chart, and there's your descending price channel, and that area held. Looked like we were going to see a punch through and then maybe a move back down below. That's what I was looking for. We never got it. So be. Que sera, Syrah. If we take a look here at natural gas, let's go see what nat gas is doing here this morning. It's really not doing much. It's just simply trading sideways here. It's made a 0.382 retracement from the low of January 2nd all the way up to the high that was, in essence, put in on May Day, on May 1st out there. So it has done what it has done, at least its initial work here, by moving down to that 0.382 level. Let's take a look at some stocks here that are popping and dropping in the marketplace. And we can Tesla. So we got Tesla out here. Tesla had a huge day yesterday. It's got still a huge, or it had a huge short interest. I believe it was about a 26% open interest, a short interest, I should say, percentage out there. That's what we saw yesterday, was certainly some short covering. I suspect we're going to see some of that today for the non-believers. It was a very strong, powerful candle yesterday, 28 million shares to the upside out here. So far today, in only an hour and 15 minutes of trading, more volume, 12 million shares. That's 12 million going against. It's got more volume today than it actually had yesterday. I don't know about at this time. How could I do that? I could put up an hourly chart, and that might tell us. So let's go take a look at the hourly chart and see what that actually does look like out here. Let me refresh my screen and see if we can figure that out. Give me a second here for this thing to rebuild. So let's see. Yesterday was May 9th, and May 9th during the first hour up to 10:30, there were 7.4 million shares. And here we've got 10 million shares. So Tesla has more volume to the upside than it did yesterday during that first hour of trading out there. Let's see what else we've got that we can take a look at out here. This is, let's see, what do we want to, Whole Foods Marketplace now? Let's see. Well, we took a look at Molycorp. I'll just pull Molycorp back up here. This is having a nice day for sure, and looks like Molycorp, it's got some volume behind it, so it's going to run into turbulent area here, which is the high volume bar on January 25th, that low 686. Looks like that has already been tagged. Got up to 683, so close to being tagged, but you got 17 million shares going against 51 million shares, so you got good volume for an hour worth of trading. On the A to B equals CD, this says that it really wants to trade up into the high of that bar, which is 808, and that is on MCP. Let me peek around here on my screen and see what else is moving and grooving here. You got Panel. PANL is the ticker symbol. That's down about 11%. So let's go take a look at this equity, see what it is doing. PANL. I thought I had it up here on the screen. Oh, I know. We'll go look at LinkedIn here in a moment. Let's put Panel up on my screen, see what it is doing. Again, not JPanel, because you won't pull up a ticker symbol. Fat Fingers again, PANL. There we go. As we take a look at it, so down with volume. Looks like that was headed into a area of resistance, because I see a black line on my screen. So let's go take a look at that. Most certainly it is. So this area here, this has been traveling in a, well, this hit a resistance point, which was up right around the, we'll call it the 33.50-ish, 34, I'm sorry, about 34.50 area. That level was hit here on May 9th yesterday. That area held as resistance. We're seeing some volume off of this equity, 1.4 million shares. Look, this what Panel wants to do is move all the way down to that high volume low on November the 8th out there, right around 21.55 to 24.53, and it needs to break the swing point here from April the 4th. Which is 26.95. No volume down there. It's got the volume to break through that, but it has not approached that swing point just yet. That is on Panel. I want to go take a look at LinkedIn, LNKD, because it is a strong equity, but it has an island reversal out here. And so that is one of the IBD stocks out here. So you can see it's got this nice big island reversal with volume off of the top here. Volume has been lightening up, and we'll want to really pay attention to LinkedIn. It may go ahead and make its way back to the big breakout that it had on February 8th with 13 million shares to the upside. Coming back in there with some light volume, that would set up some nice buying opportunities. 877-927-6648. We'll be right back, folks.
Are Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 17 points right now. S&P totally flat. The composite is up 9. Russell 2000 up 3.5 points out there. And had a request to take a look at the 30-year June the Treasury bond, the June contract. That's what I've got up on my screen here right now. We're seeing a little bit of conviction to the actual downside here. So with the Dow being off a bit, you see bonds here moving down as well. So you've got that correlation that's not out there. regardless here, what the bonds have done, made a nice move off of the bottom here. We're taking a look at the low on March the 8th. That low is 140.14 out there. Makes a nice straight line move, a nice real straight line move up to the high that was put in here on May Day, on May 1st, up at 149.29. What we're seeing now is a retracement back. Now, the first area of support is just about where it is trading to, which is the sideways consolidation level that it broke out of. Now, normally, if we take a look at that, and that takes you back to the January 2nd high out there, which was 144.29. Typically, when you break a consolidation, what happens is you end up getting a retest of that just to confirm whether or not it was really a breakout. In this case here, in the case of bonds, it broke through on April the 3rd, and you never got that retest. Instead, it made that initial price objective, which was the original consolidation. Made it a tad just higher. Remember, these are like Jack Sparrow says, it's just really a guideline, and it gives you a really good target for where to be taking a look at your outcome, your objective here. Now, so that level is what's going to be tested. You get back inside the actual consolidation level, that first consolidation level of 144.29. Well, it certainly opens up the 0.618 retracement at 143.3. But quite frankly, if you break back into a consolidation level, it actually says you can go all the way back down to the bottom of that consolidation. That would take you all the way back down into March 8th. But first things first, needs to break inside the consolidation. And then I say if it breaks the 618 level, which is 143.30, then I think it really sets up the opportunity for it to just simply move all the way back. And then what do we have? Then we've got a larger consolidation. We got a consolidation from the 140.14 all the way up into the 149.29 or 149.20 level, and that is on bonds. So we'll just have to take that one moment at a timeout here. But bonds moving lower with the market here being off just a tad. It's not really lining up. If we go take a look at that 30-minute contract inside the NQ, it's telling you it doesn't want to bust it low. Markets are going to end higher today. Just that's what everything is pointing to right now. If we go back and we take a look at the Queen here, the Queen did bust through the first level of support here, but it hasn't broken through enough. It looks like the euro also really still wants to bounce here. That would put a little bit of energy into the market, probably back off a little bit on the gold itself. Right now you've got gold is off $45, but you got to stay in the trade. Just stay inside the trade. Don't try to put too many correlations together out there. Folks, do yourself a favor. If you subscribe to any TFNN services, we've got a great opportunity. It's not done that often. It is our Tiger Dollar promotion. You get a 20% bonus for any purchase over $500 or more. On top of that, a 5 to 10% amount that's going to be donated by TFNN on your behalf to the One Fund for all those folks up in Boston. So go over and do that. Also, you can use that money, whether it's for my services, Basil services. How about the Art of the Chart software? An absolutely incredible piece of software out there. Go check out all the videos that David has put together on the website. It is a great package. Also, tomorrow in Boston, Dynamic Trading Strategies, hosted by Nadex. And you'll see Tom O'Brien and Darrell Martin. Give them both hugs and not kisses, just hugs and handshakes from me. Have a great weekend, folks. I'll look forward to seeing you Monday morning. Take care.